It seems like a frequent question that we are getting asked these days is about back taxes. What are they? How do they work? Does my seller owe these taxes? Back or supplemental taxes are taxes that are owed from a prior year and have not yet been paid. They typically result from an exemption being removed from the property for prior years. We all know that tax exemptions remove part of the value of the property from the taxation and thus lower the taxes due on the property. Types of exemptions include homestead and over 65. According to the Texas Tax Code, if the chief appraiser discovers that an exemption that is not applicable has been erroneously allowed at any one of the 5 preceding years, the chief appraiser shall add the property or appraised value that was erroneously exempted for each year to the appraisal roll, as provided by Section 25.21 of this code for the property that escapes taxation. If an exemption that was erroneously allowed did not apply to all taxing units in which the property was located, the chief appraiser shall note on the appraisal records for each prior year, and the taxing units that gave the exemption are entitled to impose taxes on the property or value that escaped taxation. The taxing unit will then send a supplemental tax bill when the exemptions were found to be erroneously applied. Oftentimes, the exemptions get removed after closing, when the county picks up the deed transferring the property. Comparing their records to the seller information on the deed, the county may find out that exemptions were erroneously applied. A supplemental bill will be sent out and the property is encumbered with a lien for those back taxes. While we as the title company do our very best to determine if there are any changed circumstances that could result in a lost exemption for the current and previous years prior to closing, if there's nothing alerting us to that and none of the parties bring it to our attention, we pay the taxes in accordance with our current tax certificate and prorate on the best information available to us, which in most cases is the previous year's tax bill. So although we do our very best to determine if any supplemental taxes may be due and best collected by the taxing authority on or before closing, if an exemption was removed for the prior year to our closing, the seller is still personally responsible for payment. The title policy protects the buyer from the lien for back taxes, but it does not assume the seller's responsibility or liability for payment of those taxes. The title company will seek payment from the seller, and the seller remains responsible for them. An example of a situation where exemptions may not be applicable but did not get discovered until after the closing is a situation where the seller had a homestead exemption filed on 2 properties, and we were never made aware of the other property. Seller claimed the property we were selling as his homestead, both on the tax roll and our documents. We had no reason to believe that this property was not his homestead. The tax office alerted to the transfer of the seller's property upon our filing of the deed, sees that the seller has claimed 2 homesteads, and decided to remove the homestead exemption from our closed property. The taxing authorities can reassess the taxes over the previous 5 years. Thus, taxes can be a significant amount. We had another situation where the owner was an elderly man who owned the property, in this only one, in Texas. So he claimed the property as his homestead and received an over 65 exemption on the property. On his tax bill, he had the tax assessor mail the bill to his assisted living facility that he moved into during the year that he sold the property. The tax assessor then wrongly decided to remove the exemptions for the seller, believing that he fraudulently claimed the property as his homestead with an over 65 exemption. The seller then had to fight the tax assessor to reinstate the exemptions by proving that he lived there during the year in question and that was the only property that he owned in Texas, and therefore could maintain his homestead and his over 65 exemption. While the tax assessor did reinstate the exemptions and the seller did not have to pay the supplemental taxes, the resolution was not without headache for the seller. Your seller is required to pay the correct taxes and will remain responsible for years he or she owned the property, even after closing. Refusal to pay can result in a lawsuit against the seller, which costs the seller more than just the back taxes. When supplemental taxes get assessed after closing, the seller tends to get their agent involved and ask why they are getting billed. It is better to discover any misapplied exemptions prior to closing. Don't you think? Please send your suggestions for our tip of the week to the tip of the week email at tipoftheweek@allegiancetitle.com. And remember to let us be your closing team on your next transaction.